Let's stay on this rally because our next guest says it is just more proof that there are plenty of reasons to be bullish right now. James Frischling, NewOak President, is here. And Jim, well, I mean, what a day. I mean, we're up above 200 points. We pulled back a little bit. Consumer confidence, home builders. Nicole just hit all the high points. What is standing out to you today?
Well, again, I think what's going to stand out to me is the Fed is going to be signaling and doing a lot of talking about their tapering and their easing off. In the meantime, they're getting fed some great ammunition, consumer confidence at a 5-year high, the housing market now, the recovery at a 6-year high. The recovery really is starting to take shape, and that's giving the Fed a lot of ammunition to now talk about their exit, because what they don't want to do is spook the market, but if they continue talking about it, and if it's on our mind and we know the tapering or the easing off is in the cards, I think we get more used to it and the market can withstand the Fed's ultimate exit.
So we know that the Fed's going to pull back. If we get used to the word tapering now, maybe by the end of the year, do you think we're going to start to see those signals? I mean, they're kind of throwing up their hands, as you mentioned already, a bit on this one.
And they're doing a lot of signaling. And I think, you know, this could be a busy summer. We're going to have, obviously, the job numbers. We're going to get 3 of those. And that's a key factor on the Fed's mind to see if the employment rate continues, or the unemployment rate continues to drive lower. At 7.5%, still well above the target. They said it's 6.5%, but it has been improving. The other thing is a lot of inflation data. But right now it's benign, so that doesn't give the Fed a whole lot of reason to curb its, I guess, its enthusiasm for bond buying. But we think let the second quarter GDP numbers come out, let that be digested, evaluate the sequester cuts, evaluate the higher taxes. And I think the market's going to actually be able to withstand it. The economy is going to look pretty good. And I think the Fed's going to be able to start pulling back. End of the summer is when I think that we're going to start seeing it.
One of the things that you've been talking about, and you've been doing this for the last year, and you talk about the 4 pillars of banking, and it's the names that we were just talking about with Nicole: Bank of America, Citi, JPM, Wells Fargo. I mean, these are all names that you've been backing for the last year. The performance, the stock performance, is their best performing sector in 2012 was banking. Do you stay on these names? I mean, we're talking, you know, double-digit gains for this group.
Right, I mean, it's certainly getting harder, but the fact is, we believe that the core 4, as we called it, the importance of these large banks to be the pillars again of the financial system and in terms of the economy.
I'm worried that I'm going to miss this one. You know, I'm worried that if I look and I see Bank of America up 85%, Citi up 90% over the last year, I'm thinking, it's over. I got to find something else.
Yes and no. Here's why it's not over. I think we're seeing the return of securitization, still well off its highs in terms of volume creation from the pre-crisis levels, but better than it's been. I think about 14% up over last year, and it's a high-margin business for the banks. Shadow banking system, and I know this makes the regulators cringe when I say these things, but the fact is these are important things for the economy to do better, and these are the types of products and transactions that allow the banks to actually earn better profits. So to a certain extent, yes, I think a lot of the easy money has been made, but I do think the banks are going to, especially these large banks, are going to innovate their way back into some high.
This regulatory environment, you really think that that's a message that's in play right now?
It is absolutely in play right now. In fact, if I understand it, the shadow banking system now has about 16 trillion of amassed 16 trillion of assets, which exceeds the amount of assets in the private deposit-taking institutions. So it is a very important piece. The private equity firms are playing a role in this, taking a lot of the risk on. But the fact is, the banks are doing this business, and it's important for the economy. It's kind of the third leg of this stool. There was the corporate issuance, a lot of debt, bank lending, which has come back, and now the shadow banking system.
We had confidence come out today. We obviously had the housing number come out today. Both of these really giving us a big boost on the markets. I got to bring up a couple of consumer names you didn't like 6 months ago. They've actually performed. Best Buy and Radio Shack, you didn't like them. I hate to tell you this, Best Buy's up 119% since you said not to buy it.
In the last 6 months. Sometimes you win, sometimes you lose, and sometimes it rains. I think we got a little too cute. We were thinking about, we liked retailers because we liked the confidence in consumers, but we were looking for innovative companies. We were looking for inspiring companies. And the truth is, the great discounters and the brick and mortar shops like a Best Buy did perform. I will say, having had a Best Buy experience recently, the Geek Squad, 2 thumbs up. I have to say it was a very positive experience. So even my own experience was wrong, as well as my prediction on the stuff.
They're the last men standing, if you will, and ladies as well, when it comes to, you know, electronic stores. Jim Frischling, thank you.
Thanks very much.
All right, we'll talk to you soon.
Thank you.